Hello and welcome to Money News on Newsmax TV. I'm John Bachman. Joining me right now via Skype from Los Angeles, California is Kathy Fettke. She is the CEO and founder of the Real Wealth Network. Kathy, it's great to have you with us.
Great to be here.
All right, I want to take a look at the housing market, and the question on a lot of realtors and real estate investors and home buyer and sellers' minds is, are we headed for another housing bubble? Housing has been a bright spot as of late in the economy, and as a result of that, as a result of better sales, I should say, mortgage interest rates had been ticking up. But about 3 weeks ago, they started to slide and have been coming down slightly ever since. The average for a 30-year fixed-rate mortgage at the time we're recording this fell to 4.22%, according to Freddie Mac. Is this downward slide on mortgage interest rates going to continue?
Well, I kind of hope so. I mean, if interest rates go up, that is a good sign in slowing down any bubbles that could be forming. When interest rates come back down, well then, shoot, people better jump in and buy, because that can't last. It just can't last forever, these low rates. They are manipulated. They are artificially low. It's a great opportunity to lock it in if you can qualify. But again, if they remain too low for too long, there will be bubbles forming, and nobody wants that.
And we saw the housing market come back pretty quickly at the beginning of this year and up and through the spring, and that's what accounted for those interest rates rising, but they have seemed to come back down, and so that might be that give and take that you were just talking about. And there's also a couple other factors that are impacting things, and one of those is consumer confidence. That has been falling as well, but the shutdown isn't helping either. What kind of impact is the government shutdown having on housing, especially with these government-backed mortgages?
Well, it just leaves so much uncertainty in the market. We don't know if we have a government right now, right? So there's just a lot of confusion, uncertainty. But what we are certain about is that people need housing. They need a place to live. This is a necessity. And we also know that we have a growing population. We know that we have not been building homes over the past 6 years. So with a growing population, no new homes, we're going to have a demand for housing. So with or without a government, people are going to want to live somewhere, and the free market will always win. The free market in this case means there's going to be less supply than there is demand, and that will drive prices up in some areas.
And that has been the moment a lot of people have been waiting for, especially those who bought houses in 2007 and 2008. And there's also something else that some folks say could spell some trouble for the housing market, and that has to do with these so-called vampire and zombie foreclosures, terms coined by the real estate information company RealtyTrack. And for those that don't know, a vampire foreclosure is when the bank takes ownership of a home, but the prior owner, the foreclosed owner, stays there. And a zombie foreclosure is when the homeowner just abandons the property altogether. But in both cases, banks have been holding on to these properties and not putting them out on the market because they are presumably waiting for the prices to come back up. And now that we've started to see those prices come back up, more and more of those houses are getting back on the market, potentially flooding the market in certain areas and then maybe driving prices back down. How problematic would that be if, say, 500,000 homes all of a sudden showed up on the real estate market?
Well, for investors like me, that's a deal. That's a bargain. We like to see a lot of inventory. It means that we can buy property for low prices. But, you know, it just depends on what kind of properties these zombies and vampires are. If they are teardowns, if they're distressed, if that vampire or zombie hasn't done anything to fix up the property, he's just been living there, had no money to pay the mortgage, so maybe no money to upkeep the home, then there's a problem there. That's a distressed property and prices will be low. Again, that's great for the buyer coming in, not necessarily so good for the neighborhood and the values in that neighborhood. But once those zombies and vampires are out and those properties are sold, everything will even out again. It's a fairly low number in the scheme of things. And I'm not personally too worried about it because there's such a desire for, it's such a demand for housing that I think it'll get gobbled up pretty quickly.
Well, I mean, it's October. At least it gives us a chance to talk about zombies and vampires ahead of the Halloween season. But I also want to ask, you know, the housing market, of course, we talk about it in a lot of terms, in very general terms on a national scale, but as anyone who follows the real estate markets know that every market can be different based on where you live. Give us a couple examples on where you think the real estate market is very strong and things are very healthy right now, and one area where you see some problems potentially cropping up down the road.
It always comes down to jobs. People need to have money in order to afford their homes. affordability is the key. So in areas like Detroit, where there's some serious problems in that city in terms of employment and other things and crime, I think that there's going to be a glut of housing there for a while. But then you can see other areas like Texas. You've got Houston and Dallas that are just booming with jobs, and therefore there's a great demand for housing, and that will continue for a while. I mean, in Houston, we saw 18% increases in property values. I mean, that never happens in Houston. And it's really not going to continue because it was really more of a bounce back from an overcorrection. But we're going to see prices continue, hopefully at a more sustainable pace.
Yeah, nice and a level, none of this up and down, and none of the roller coaster ride. We've had enough of that, not just in real estate, but in a lot of financial sectors as well. Kathy Fettke, thanks so much for being with us, CEO and founder of Real Wealth Network. A pleasure having you with us here at Money News.
Thank you so much.
And thank you for watching.